Have you ever wondered how you can make your money work for you? Well, one such method is through dividend investing. Allow me to introduce you to this concept. Dividend investing is a strategy that involves acquiring shares in companies that consistently distribute dividends. Now, you might be asking, what exactly are dividends? Simply put, dividends are a slice of a company's earnings handed out to shareholders, usually on a regular basis. Think of it as having a small piece of the company's success. When the company profits, so do you. This provides a steady flow of income, separate from the potential gains or losses from the stock's price fluctuations. It's akin to having an extra paycheck that comes in regularly without having to clock in extra hours at work. So, you might be thinking, how does one get started with dividend investing? Let's delve into that. Embarking on the journey of dividend investing involves several key steps. Our first step is research, and it may sound like a task, but it's more akin to a treasure hunt. We are looking for companies with a consistent history of paying regular dividends. These companies, often mature and established, are like sturdy oak trees that provide a steady stream of income. They are typically found in sectors such as utilities, consumer goods, and healthcare. Once we've identified potential dividend-paying companies, we move to the next step: buying shares. This is done through a brokerage account. Think of this account as your gateway to the world of stocks. It's where you'll make your purchases, monitor your investments, and receive your dividends. Now, let's pause for a moment to talk about diversification. It's a term you'll hear often in the world of investing, and for a good reason. Diversifying your investments across different sectors is like spreading your eggs across multiple baskets. It helps mitigate risk. If one sector faces a downturn, your investments in other sectors can help offset any potential losses. Here's where the magic of dividend investing really shines: reinvesting dividends. When you receive dividends, you have the option to reinvest them, buying more shares of the company. This is the essence of compound growth. Like a snowball rolling down a hill, your wealth can grow exponentially over time as you reinvest your dividends. And that, in a nutshell, are the steps to start dividend investing. We start with research, move on to buying shares through a brokerage account, diversify our investments across sectors, and let the magic of compound growth work in our favor by reinvesting our dividends. Now that we have a basic understanding of how to start with dividend investing, we must look at some important considerations. While dividend investing can be a rewarding strategy, it's crucial to keep certain factors in mind. Firstly, it's important to consider the company's financial health. A company's financial stability and profitability can directly impact its ability to pay dividends. Look for companies with strong cash flows and low debt levels. These companies are more likely to maintain or even increase their dividends over time. Next, consider the dividend payout ratio. This is the percentage of a company's earnings that are paid out as dividends. A low payout ratio can indicate that the company has room to grow its dividends in the future. However, a high payout ratio could mean that the company is returning more to shareholders than it is earning, which could be unsustainable in the long run. Now, you might be tempted to go for companies offering higher dividends, but remember, higher dividends do not always equate to better. It's the consistency and sustainability of these dividends that truly matter. Companies with a history of consistent and growing dividends are often a good sign of a strong and stable business. But let's not forget, there are potential risks. Companies may cut or even suspend their dividend payments during tough financial times. This could significantly impact your income stream, particularly if you're relying on dividends for a substantial part of your income. In conclusion, dividend investing is a strategy that can provide a regular income stream and potential for growth. It's crucial to remember that investing is not a get-rich-quick scheme. It requires research, patience, and diversification. Investing in a variety of companies across different sectors can help spread the risk and potentially increase your chances of success. And as always, consider seeking advice from a financial advisor before making any significant investment decisions. With the right strategy and approach, dividend investing can be a rewarding way to grow your wealth over time.